Last year, I legally slashed my tax bill by tens, if not hundreds of thousands of dollars, while most people donated their entire checking account to the IRS. It's because I own a real estate portfolio of 153 Section 8 rental properties that exempt me from the tax rules that apply to the general population. If you're making six figures a year and writing painful checks to the IRS every single year, this video right here might save you serious money. I'm gonna break down exactly how I utilize my Section 8 rental properties to legally reduce my tax bill, meanwhile building passive income at the same exact time. Now, the reality is, if you're making six figures a year, you're probably getting hammered with taxes. And the truth is, W-2 employees have it the worst. Your federal income tax is up to 37%. Your state income taxes are up to 13.3% in California. Your FICA taxes are 7.65%. And you have very limited deductions available every single year. Now, business owners, on the other hand, have more options, but they still face self-employment tax at 15.3%, high effective tax rates as their income increases, and phase outs of deductions and credits. So the more you make, the more the government takes from you. Most high earners are looking at 35 to 50% of their income going to taxes. But what if there was a way to legally keep more of what you earn? Now, with Section 8 real estate, you have two powerful advantages. Number one is you have guaranteed income directly from the US government. And the second biggest advantage I see with Section 8 is the huge tax benefits that you're getting. And this ultimately creates the perfect scenario for steady cash flow that you can count on and legal tax deductions that shield your income. The crazy part is the IRS actually incentivizes real estate investors. The tax code is literally designed to encourage house development, and Section 8 specifically addresses affordable housing needs. And this isn't a loophole or a gray area. It's explicitly written in the tax code. It's completely legitimate and encouraged, actually. You're not avoiding taxes, you're investing exactly how the government wants you to. Now, depreciation is the most powerful tax benefit of Section 8 investing, and the concept is extremely simple. The IRS essentially allows you to deduct the cost of your building over time, and residential properties depreciate over 27 and a half years. That essentially creates a paper loss that offsets your income. Let's look at this example. You have a $100,000 Section 8 property. Your annual depreciation is $3,636, and this is a tax deduction that you get for the next 27 and a half years of owning the property. And the crazy part is, your property isn't actually losing value. In most cases, it's probably appreciating, but you're still getting the tax write-off. Now, if you own 10 properties worth $100,000 each, that's $36,360 every single year in tax deductions. And at a 35% tax rate, that's $12,726 in savings. And that's just from the depreciation portion alone. With my 153 Section 8 rental properties, the depreciation deductions are massive, and that shields a significant portion of my income. Meanwhile, the properties are still appreciating year over year. Now, standard depreciation is powerful, but there are ways to accelerate it. Cost segregation, for example, which essentially breaks down your property in components. Some components can be depreciated into 5, 7, or even 15 years. This front loads your tax deductions big time. For example, with a $100,000 Section 8 rental property, with cost segregation, you might be able to depreciate $20,000 to $30,000 in just 1 year, instead of only $3,636. Bonus depreciation. This currently allows 80% first-year depreciation on certain components, which creates massive upfront deductions. And these strategies can create enough paper loss to offset your W-2 income if you're a real estate professional, your business income, or any other investment income that you have. Now, beyond depreciation, nearly every expense related to your Section 8 properties is a tax deductible. Your property management fees, which are 8 to 10% of your rent, your maintenance and your repairs on the properties, your property taxes, your insurance, your mortgage interest, your travel expenses to check on your property, your home office deductions if you manage your properties from home, professional service like your accounting fees, your lawyer fees, or potentially consulting fees, any education related to real estate. These deductions are literally dollar for dollar against your real estate income. And even if your property is cash flow positively, you can often show a paper loss for tax purposes. This is completely legal, and it's also encouraged by the tax code. Section 199A of the tax code offers another huge benefit: qualified business income deduction. This is a 20% deduction on your net rental income, which is available for most real estate investors. For example, a $100,000 net rental income after expenses but before depreciation is a $20,000 deduction. At a 35% tax rate, that's $7,000 in tax savings. And this is on top of your other tax deductions that you originally had. This deduction deduction alone can reduce your effective tax rate by several percentage points. And if you qualify as a real estate professional, the benefits multiply. The requirements are 750 hours plus annually in real estate related activities and more time in real estate than any other occupation. The benefit is real estate losses can offset any type of income, including W-2 income, business income, or investment income. For example, if a doctor's earning $500,000 a year and his spouse qualifies as a real estate professional, let's assume they own 10 Section 8 rental properties showing $100,000 in paper loss. They can reduce their taxable income by $100,000. And at a 37% tax rate, that's $37,000 in tax savings. This is how many high-income professionals reduce their tax burden to nearly $0. Now, when you sell a property, you'd normally pay capital gains taxes. But with the 1031 exchange, you sell a Section 8 rental property, you invest the proceeds into another investment property, and you defer all of your capital gains taxes. And you could do this repeatedly throughout your life. For example, if you buy a $100,000 Section 8 rental property and it appreciates to $150,000, you can sell the property and use a 1031 exchange. And then you use the $150,000 that you received to go buy a $150,000 property. You pay $0 in capital gains taxes because of the 1031 exchange. This allows your wealth to compound without tax drag. You could potentially never pay capital gains taxes in your lifetime. And when you pass away, your heirs get a stepped up basis. All the accumulated gains are wiped away for tax purposes. Your heirs can pay no capital gains taxes on your lifetime of appreciation. The thing is, you don't need 153 Section 8 rental properties to see significant tax benefits. Even 1 to 3 properties can make a meaningful difference. Now, here are the steps to implement this strategy. Step 1, consult with a real estate focused CPA. The thing is, not all accountants understand these strategies. Find one that specializes in real estate investing. Step 2, determine your investment capacity. How much can you invest? What financing options are even available to you? Step 3, set up the right business structure. A 2 LLC structure for asset protection and proper entity selection for tax purposes. And step number 4, acquire your first Section 8 rental property. You want to focus on landlord-friendly states. Target properties under $100,000. Ensure that there's strong Section 8 demand in your area. I literally have a step-by-step guide on my YouTube channel that shows you how to lock in your first Section 8 rental property. If you're making over 6 figures and writing brutal checks to the IRS, Section 8 real estate can save you tens of thousands of dollars annually. I've helped doctors, lawyers, business owners, and high-earning professionals implement this strategy to dramatically reducing their taxes while building wealth at the same exact time. If you're serious about keeping more of what you earn, I have something for you. My mentorship is designed so that landing your first property isn't just possible, it's inevitable. We have the most hands-on coaching in the entire space, and I don't want you to miss out. So click the link in the description if you want to learn more. Thank you for watching, and I'll see you in the next video.